Welcome back to another episode of Hard Money Dispatch, the show that helps you demystify sound money and see the system for what it is. Today's guest is Scott Marmoll. Scott is a Bitcoiner and seasoned investment professional with a mission to bring high-touch advisory services to Bitcoiner business owners. Most recently, he served as vice president at Cantor Fitzgerald. He has spent his entire career around middle market mergers, acquisitions, capital raising, and private equity. He's been studying Bitcoin for a decade and contributes regularly to Bitcoin education through his local Bitcoin meetup in Charlotte, where he co-organizes technical workshops and educational events. Scott, welcome to the show.
Hey, Brian. Thanks for having me. Quite the intro.
For sure. So you spent years in traditional investment banking and private equity. That's quite a jump from that world to the Bitcoin world. What wound up pushing you to leave that sphere and build something in Bitcoin instead?
Yeah, there's not a lot of us that kind of split minds across high finance and Bitcoin. I was kind of learning both at the same time because I think otherwise learning one kind of precludes you from getting ingrained in the other, being investment banking, high finance, and Bitcoin. And so all along my sort of junior banker years, I was stacking sats and studying Bitcoin and studying the economy and money and what these things meant. And at the same time, watching, leverage buyouts, private equity investment behavior driven by chasing returns, driven by the returns demands of the limited partners of those funds. And so it was a natural eventuality that the Bitcoin thing has possessed me. My 9 to 5 is investment banking, spreadsheets and PowerPoints and deal making. But my 5 to 9 and really every waking moment outside of the office was focused on trying to understand Bitcoin and learn more about it. And so every Bitcoin bull market, you sort of stare at your reflection in the pond and say, how do I merge this passion with this profession? And I had done that sort of three times in a row before I figured out what that was going to mean for me. And at Cantor, I realized that there is, an investment banking angle to serving the Bitcoin space. I wasn't on the teams focused on the crypto world, and I have my own opinions about where the value is across Bitcoin and crypto. I think there's a lot of noise amidst the signal that is just focusing on Bitcoin. And ultimately that take and the desire to build something for myself drove me to step out on my own in a place where I can have conversations like this without having to get permission from compliance of a deposit taking bank when I was at earlier roles like Fifth Third Bank or at Cantor, where the message around crypto was kind of managed from the top down, and I didn't agree with it. And so stepping out on my own was to pursue Bitcoin focused businesses. And that doesn't mean businesses just that have a product or service wrapped around Bitcoin, but rather just businesses owned by Bitcoiners, because a Bitcoiner makes different investment decisions based on what they've learned about Bitcoin as their hurdle rate. And so, Bitcoin being the closest thing I'll ever experience to my natural calling in work and life is what pushed me to leave that world and build something Bitcoin native instead. And really, it's the same type of work. It's deal making, capital raising, and corporate finance advisory work. The only difference is I do it for myself now under the Capital B Advisory brand. And I am kind of choosy. I only take on clients who are Bitcoiners because at the end of the day, I have found over the years through my local Bitcoin meetups and other places, it is absolutely the most rewarding to interact with other Bitcoiners. And so I wanted to find a way to do what I'm good at, which is deal making, but do it with Bitcoiners. And so that's my newest initiative. As of October, I launched that, and it's been going really well. Glad I did it.
That's a great segue into my next question, which is, as you just mentioned, you work exclusively with businesses owned and operated by Bitcoiners. What's the biggest difference you'd say between those founders compared to entrepreneurs more in the legacy business and finance space?
Yeah, I mean, it's their investment decisions, right? Their hurdle rate is Bitcoin. And so they're much more stringent with their allocation of capital and their allocation of their time. So part of the reason I think that the service that I offer needs to exist is because if you're getting advice from an investment banker who doesn't understand Bitcoin, they're giving you the advice on what to do capital markets wise from the perspective of, well, your opportunity cost is to sit in dollars and lose that melting ice cube to currency debasement. The Bitcoiner perspective as well, your opportunity cost is to sit in Bitcoin and clip a really nice, albeit a little low CAGR right now over the long term. And so it totally changes the decision model. And the way I think about M&A, capital raising, it's for a founder, owner, entrepreneur, it's the third most important day of your life. You get married, you have a baby, you sell your business or raise capital. And to be a part of that third most important day, you want to select an advisor who understands the world the same way you do. And that has been the biggest difference is I am finding myself agreeing a lot more often with the wants and desires and decision preferences of Bitcoiner business owner clients than when I was in the fiat world. A business owner that hasn't come to understand Bitcoin will take a very different approach to capital markets, to raising debt, to raising equity, a different risk profile because the opportunity cost for them isn't a 30, 40, 50% CAGR on Bitcoin.
Okay, another nice segue there. How does capital allocation change when you're thinking in Bitcoin terms rather than dollars, both at a personal level and inside a business? And could you briefly, while we're at it, just define terms that some listeners may not be familiar with, like CAGR and hurdle rate?
Yeah, so first, CAGR and hurdle rate. The CAGR is an acronym for compound annual growth rate. And I'll apologize. The finance industry education has imbued in me the cultish obsession with acronyms. It's an in-crowd strategy that us finance folks use to make sure that we feel important when we're talking to folks that don't understand our world. So apologies. So compound annual growth rate is just the percent on an annual basis that something has grown. So if an asset's up 100% over 2 years, the compound annual growth rate is whatever math you have to get to each year on a compounded basis to get to that. And then the hurdle rate is really what is your decision? What's your opportunity cost? So when you're investing out of dollars, your opportunity cost is holding the dollars, which gets debased in real purchasing power terms. And so your hurdle rate is basically zero or negative. On a Bitcoin standard, your hurdle rate is that Bitcoin compound annual growth rate. And so all of a sudden, investments that don't return as much as Bitcoin grows don't look attractive anymore. And to your question about how that changes the capital allocation, I think it's really interesting. There's two ways to think about it. In the Bitcoin world, especially now that you can borrow against your Bitcoin, there is an increasing approach to, okay, if I can borrow against my Bitcoin and pay 10% interest, then whatever I'd use that loan to do, as long as it generates greater than 10%, I'm kind of making money without having to sell the Bitcoin. Now, that is one approach, but it doesn't consider the sort of hard line question, which is really, if you're going to do that, you should still be comparing to the Bitcoin hurdle rate because you could use the loan proceeds to buy more Bitcoin. So from a business owner perspective, the question is, if I'm going to open this new location or add space to this facility, can I see math that shows me that the cost of this growth is going to return more than what it might be if I just used that same money and bought Bitcoin with it and held it for the long term? And there's all sorts of implications to, well, is there cash flow to it? And does it have tax advantages and whatever? But Bitcoin with its super high performance, long-term CAGR growth rate of, 20, 30, 40, 50%, depending on the time period you pick, it makes it you have to be much more thorough with that decision of, well, what could I do with this money as a business owner, whether it's reinvest in the business or hold it in Bitcoin for the long term. So I would say from a capital allocation perspective, it drives entrepreneur owners of businesses to be very nimble and cost conscious. At the same time, when there's an opportunity that they see that does have potential to return, in Bitcoin terms, a positive opportunity, they're very aggressive to go after that. So on one side, it kind of reduces the low return malinvestment of, okay, yeah, let's open one more location and it might give us a 10% on our money over the next 5 years. That doesn't happen under the Bitcoiner entrepreneur's mindset. But on the other end of the spectrum, it's like, this is a $10,000 investment opportunity to build a website and digital marketing presence that could give us, 1% of a $100 billion total addressable market. That's something that a Bitcoiner business is going to pursue aggressively. So yeah, I would say it makes the capital allocation decision matrix stricter, but ultimately it makes the quality of things that they allocate capital to much higher.
Interesting. So have you seen cases where someone will opt for just adding Bitcoin to their balance sheet rather than scaling their operating business?
For sure. And part of my thesis in building Capital B Advisory is that there are a lot of, let me rewind. When I was in private equity, part of the reason I left that world was because I was increasingly having to make investments into the deals that I was evaluating. And as a Bitcoiner at the time, I'm looking at these deals going, I don't really want to invest in this. I want to just buy Bitcoin. And over a 5-6 year investment hold period, it's not clear to me that I'm going to outperform Bitcoin's potential growth. And now 5-6 years later, I can look back and say that that is probably not going to be the case for most of those investments. Some may outdo it, but the point being, I for sure have seen that. And part of the thesis for Capital B Advisory is that there are new Bitcoiners every day. The number of Bitcoiners doesn't really go down in my mind. I don't think people have this kind of epiphany and then go back to sort of not understanding Bitcoin. And some of those folks are business owners, and some of those folks' businesses are just okay. They're, they're 10% margin businesses, and they're only worth, 5 to 7 times a multiple of their earnings. And the question becomes: is holding the business and being the receiver of the cash flows a better investment than selling the whole thing for Bitcoin? Now, that's not a conclusion a business owner is going to come to overnight. But I think eventually the hardliner Bitcoiner concludes that they would like to own nothing but more Bitcoin. Some of those folks own businesses, and they're going to need good advice on how to sell that business for the highest value as possible, and then take the proceeds and buy Bitcoin. So yes, for sure, I have seen folks start to look at their business and say, I don't want to reinvest here because I'm not confident in the returns, particularly when I look at the opportunity cost of investing in Bitcoin instead. And so, yeah, a big piece of Capital B Advisory's prospecting and work is talking to entrepreneurs who have a successful business and are starting to think about what's next for them and for the business. And sometimes they're saying, man, I don't want to own this anymore. I want to own Bitcoin. Then you need an advisor to help you get through the sale process of that business and make sure that you get the best terms possible for yourself, the best value, and ultimately end up with as much capital on the other side of that to go buy what you want, which is Bitcoin.
Wow, that's wild. I had no idea that was happening, but it makes perfect sense. As you mentioned, it kind of changes your whole worldview once you understand Bitcoin and the opportunity cost of everything else. It's a total shift. And for me, it started at the time I found Bitcoin. I was coming to understand the whole monetary system as a whole and what fiat is and how it works. And Bitcoin was just this fringe thing that was supposed to be hard money and had to be mined and was decentralized and seemed so promising, but it was still, the market cap was like several billion, and I just never imagined we would get to this point. It's so wild to hear these stories and talk to someone like yourself who started actual business, actual advisory around just this thing that I never would have imagined there would even be a demand for 10 years ago. Like all the potential that I saw could possibly be, I never would have imagined they would actually be playing out to this extent, and companies adding Bitcoin to their balance sheet, people even selling their businesses for Bitcoin. Like it's just so wild. But anyway, moving on, you offer fractional CFO services. Why do you think financial clarity and discipline are really important for a Bitcoin-aligned business right now today?
I think there's a lot of really promising businesses in the Bitcoin space, and then just businesses owned by Bitcoiners. In many cases, they are, I'll say, too small for sort of standard investment banking services, sell your business to private equity. But my thesis is that these businesses are owned by folks who have come to understand Bitcoin ahead of the rest of the world. And it's likely that they will have statistically significant more luck or more success in growing their businesses. The stage of business where you aren't really ready to have an in-house CFO, but also need that skill is super common, and the fractional CFO work is super common in the marketplace. For Bitcoin-focused businesses, you need someone in that seat to do that work efficiently with the mindset towards Bitcoin accumulation as the objective. Because any business owned by a Bitcoiner is essentially a machine that they're using to accumulate Bitcoin. And so part of that approach is, look, your non-Bitcoiner fractional CFO is going to do a fine job, but he's not going to identify something like, hey, we currently have debt on the business and the amortization of that debt is 7 year. And we could refinance that for 1% amortization, long-term debt with a balloon payment at the end. And maybe it's at a higher interest rate, But if you look at the principal and interest combination for that debt, it could reduce the cash flow burden of the debt on the business. And any reduction in cash flow burden on the business is an increase in the ability to accumulate Bitcoin. And so it's something as niche or down into the weeds as that fractional CFO services is a commoditized thing in the sort of lower middle market, but the Bitcoiner mindset doesn't come through in that service unless you have a Bitcoiner doing that work for you. And there are options to do that. And then I would just say that for me, the work I really love to do is the M&A and capital raising. And if I'm working with a business in the fractional CFO setting, it's only logical that when the time comes for them to have a capital markets event, whether it's, hey, I've decided I don't want to own this thing at all, let's sell it outright, or hey, I'm bullish on my business, but I want to raise debt and put Bitcoin on the balance sheet, or hey, I want to acquire a competitor, all of those sorts of things that might need investment banking advisory work. If you've already been working with the business on a month-to-month basis, looking at the financials, helping them make cash flow decisions, you're just so much better positioned to be the right advisor for that eventual capital markets event. So for me, it's just a really logical, mutually beneficial top of funnel for, what eventually is M&A and capital raising advisory work.
Very cool. Sounds like a great service. And just to summarize, I think to put all this in the simplest terms would just be when you understand the scarcity of Bitcoin versus the infinite nature of fiat, it all just becomes a question basically of how do I buy more Bitcoin? And doing that sometimes involves reducing your own cash flow, taking on debt, reducing any or cash flow burden, like you said.
Right, expenses.
Outgoing expenses, that reducing that, then you can put more capital into Bitcoin. And it's often perceived as super risky. Someone on the outside or someone who's fully in traditional finance, if they just see it as a speculative asset, it seems like a pure gamble. Why would you do that? It's so much riskier than just having the safe, whatever quote unquote safe alternative there is. But really, the risky thing, when you understand the system, the risky thing is not having enough Bitcoin, having too much capital allocated to all these other things, which are essentially melting ice cubes. It's just a matter of how fast they're melting. Cash is melting the fastest. An S&P index fund is maybe just barely melting, more or less keeps pace with monetary inflation. And so, just wanted to put that out there, that's a really key difference that a lot of this focuses around, is just the understanding that it's not risk. Having the hardest money humanity has ever known is not a risk. The real risk is not doing that. So back to what we were discussing. You mentioned M&A, and that's like your bread and butter, your favorite thing. What does M&A look like when sound money is the measuring stick? You kind of addressed this already. How do valuation, deal structure, and incentive shift in a Bitcoin-informed framework?
So it's a great question because it depends if you're the buyer or the seller. So if you're the seller of a business, selling into the fiat world is awesome because you might have a business that, because of how much Bitcoin you can accumulate with the cash you can get from the sale of it today, is just crazy to think about, because the folks buying the business are underwriting a discount rate, a hurdle rate that isn't Bitcoin's massive CAGR. They're using a hurdle rate of sort of the targeted returns of the private equity industry. And if they're looking at debt that costs them 5% and equity that costs them 15%, and their blended cost of capital is like 12%, then they're going to take your future cash flows and discount them by 10 to 15% over the projected future to get to like a net present value. This is one of the three traditional academic ways you value a business. You lay out 5 years of future cash flow, you discount them based on a discount rate, which is using the blended cost of equity and debt capital. And this is all getting very academic, but the point is that when you're using a discount rate, a hurdle rate that is ingrained in the fiat world and subsidized by money printing, that interest rate is lower. And that means that the price of the business is higher because you're only discounting future cash flows by a smaller percentage. But if you're discounting on a Bitcoin standard, you're saying, hey, Bitcoin's going to grow 30% over the next 5 years. Cash flows 5 years from now are worth 20% of cash flows today. Some massive discount rate for that future cash flow because of uncertainty and because of the change in the Bitcoin price. So as a seller, you're looking at your business going, wow, these buyers are crazy. They're going to pay me way more than this thing is worth. I'm going to take all the proceeds. I'm going to buy Bitcoin. Great. Now the dynamic that creates is that a Bitcoiner looking at their business starts to say, I'd rather own Bitcoin. because the business is still fetching a high price in the fiat world. Now, when the buyers all come to realize Bitcoin as the hurdle rate, the price of those businesses should all come down. So there's an opportunity before that happens to exit or take some risk off the table with your business, and use it to buy Bitcoin before others. The other side of the equation is, hey, I've got a nice business. It's growing faster than Bitcoin. I want to buy a competitor. I want to make an investment. I want to open a new location, whatever it is. And in that case, you're looking at that cost of capital from a Bitcoiner perspective, which means, as an acquirer, you're not a very high bidder, right? Because you're looking at it and saying, hey, that's a nice, I want to buy this competitor and they've got nice cash flows, but I'm doing that same discounted cash flow math and discounting it by the Bitcoin growth rate, the Bitcoin compound annual growth rate. And that means that what I think is fair value is probably going to be less than what other folks might bid for that business. So as a buyer, it makes things very hard because you're probably not the most competitive. But one strategy is to sort of think about Bitcoin-backed loans as a way to not actually be, selling Bitcoin to buy, to acquire a competitor, or obviously using debt when it's responsible and conservative. But yeah, it definitely changes the dynamic on both sides. I think from a seller perspective, that measuring stick makes selling your business usually look more attractive, particularly on days like today. I wish it worked this way, but you can't really log into Fidelity and just sell shares in your private business. It takes a few months to get to that closing day. But the price of Bitcoin is surprisingly low today. So if I'm selling a business and we're closing today, your seller is thrilled if their plan is to accumulate Bitcoin with the proceeds.
Very interesting. Yeah. I think an important thing you touched on is the fact that future cash flows, fiat values of any kind, are going to be significantly worth less than they are today. And that seems to be something that's very often taken for granted in the traditional finance world, in people's personal finances. It's like anything you can do to save cash or spend cash, invest today, is much more valuable than it will be 5, 10 years from now. But yeah, you mentioned Bitcoin price being down today. I think we're roughly 30% off all-time highs from October. And it's taken, 3 months or so to fall that much? Meanwhile, elsewhere in the hard money world, silver has crashed about 20% today. Last time
Really?
I checked. So hard money advocates in that space, who always like to criticize Bitcoin for its volatility, don't have as much ground to stand on today, I don't think. But everything... Volatility is a feature, not a bug. It doesn't mean that something is worthless or not a store of value when you zoom out and look in the long term. So,
Yeah, it's funny.
go on.
Sorry to interrupt you. I left Cantor at the end of July last year. I spent about a month and a half just enjoying some time off with my newborn son. I formally launched Capital B Advisory in October, and the price of Bitcoin has literally just gone straight down ever since. That is just hilarious, poetic, and I'm enjoying the humility that it is forcing upon me. We're not wrong. We're just early is a common line in our household right now, but it is fun to watch, and I think it has given me a lot of room to build without like a chaotic bull market kind of dragging me in 100 directions, which has been great because it's allowed me to be really focused on, hey, where is the opportunity set here? And the early reception of this business model has been so positive in what feels like a bear market. It's very positive to me. And yeah, I think everybody that's stressed out about the gold and silver prices versus Bitcoin should just take a month. It'll be okay. But we have to remind ourselves that when people are looking at the 5-year performance of gold, the 5-year performance of Bitcoin on a day like today, they're close. It's competitive. And that is probably an anomaly in the comparison of those two assets. But gold has a 2,000-year history. Bitcoin is 17 years old. So we have to be patient when it comes to expecting Bitcoin to be digital gold right now, because it's just too immature of an asset for that to happen overnight. It's not an if, but a when.
Yeah, I think it's more metaphorical. The Bitcoin digital gold idea is often taken literally, when I always understood it as being more of a gold 2.0. It's like something that resembles gold in cyberspace, in the sense that it's scarce, it has to be mined, it has some characteristics of gold, but it's obviously very different. Anyway, bear markets are where building happens, as they say, although there's a lot of indications we could be in a bear market, like trading beneath the 50-week simple
Moving
moving
average.
I think
Yeah.
it is. Yeah, that's a big indicator, and price been below that for a long time, so that could easily be the case. Then again, 30% corrections happen multiple times during bull markets all the time. And this cycle has been different in that Bitcoin has always printed 3 green yearly candles followed by 1 red. This time we only had 2 green candles followed by 1 red. So it's anybody's guess, really. I think it's a little too early to make really solid predictions. I think we'll know more, 4 or 5 months from now, see how it goes. A lot of people say Bitcoin catches up to gold, even though on a 5 to 10 year basis, gold and silver are just now catching up to Bitcoin.
Right.
But a lot of times in the past, there have been times when gold has a big run up, then the Bitcoin price follows it. But I do talk about price, and the conversation is focused on investment a lot now, which is fine. That's what people are interested in. I like talking about it. But the bigger picture is more important than that. It's about the technology, the decentralized nature of it, the fact that it can't be confiscated. The 3 biggest things that make Bitcoin different to me are censorship resistance, unconfiscatability, and the absolute scarcity, combined with being decentralized. Anyone can run a node, have their own say in the network. It's a true democratic system in that sense that anyone can have one node, one vote. At the same time, it's also pure anarchy in that there's rules, but there are no rulers. And we've seen a lot of that play out in the last year. Things I won't get into right now, but
yeah, well said.
Thank you. So going back to your Bitcoin journey, where it started, you mentioned your first on-chain transaction was in 2017. Looking back now, what did you understand early, and what would you say you completely misjudged at the time?
I think the ability to use this money with no one's permission clicked for me right away. And then it takes a lifetime to kind of internalize all of the different things that will mean. You nailed it with the 3 sort of main attributes being censorship resistance, perfectly limited supply, and that no one can sort of confiscate it from you, unconfiscatability. I don't think those things were obvious to me in the beginning, but I would say the things I wouldn't say misjudged, but the things I missed that I enjoyed learning later on was at some point I sort of got frustrated with myself for not having a better technical understanding of Bitcoin. So I read Andreas Antonopoulos's Mastering Bitcoin. It's basically an O'Reilly textbook. It very much feels like you would buy it for a college course, which takes you through the technical side of it. And I found so many interesting, feels like Easter eggs about Bitcoin. And probably my favorite is that the block subsidy amount, 50 Bitcoin in the first 4 years of Bitcoin's history, and then 25, and then 12 and a half, and then 6.125, all the way down to 3.125 or whatever we're at now. Each epoch, the block reward number, which is the amount of new Bitcoins that are printed every 10 minutes when a new block is found, is also equal to the percentage of the Bitcoin supply that is printed or that is minted in that epoch. So when we're in the 3.125 era, 3.125% of the total Bitcoin supply is issued in blocks in this 4-year era, in this 210,000 block epoch. I just find that interesting. There's fun little, they feel like Easter eggs. There are 2016 blocks in a difficulty period, roughly a 2-week difficulty period where the difficulty of Bitcoin mining adjusts. And 2016 is 6102 backwards. And Executive Order 6102 was the 1933 decree by the U.S. government that made the private ownership of gold illegal. There are probably a dozen or so little Easter eggs like that just make you kind of scratch your head about how amazingly coincidental some of these things are, or perhaps masterfully designed. So that was totally lost on me in 2017. In 2017, I was just, cool, I can send this money without permission. And it seems like it goes up. And part of the thing that helped in my Bitcoin adoption cycle is that I was lucky enough to start studying Bitcoin at a period of time where by the time I was ready to make an on-chain transaction, I watched the price of Bitcoin only go up. Now that quickly ended because I watched the price of Bitcoin go from $1,000 to $18,000, and then I watched it not set another all-time high for 4 years, or for 3 years. And so from that perspective, I think there's benefits to the timing of each individual's learning about Bitcoin. And for me, I wonder if it would have taken me another cycle longer if I had kind of come in on the wrong side of that price wave. But in any event, I'm thankful that it happened because it has been a lifelong journey.
Yeah, there's a lot of little things that make you realize just how elegant the protocol is, and the difficulty adjustment is key among them. There's a narrative out there that because the block subsidy gets reduced every 4 years, prices can't keep doubling every 4 years, so miners will not have any incentive to mine and the whole system will collapse. And I really need to make a YouTube video about that because there's a lot of reasons that that may or may not be true. People act as if it's a certainty, just like people act as if it's a certainty that quantum computers will crack open old wallets. That's also nowhere near a certainty, and the incentives are against that. The thing I find beautiful about it is just the incentives. Like there's a built-in, and these don't exist anywhere else or in any other cryptocurrency, by the way, at least not in the same format, not in the same way. And people have an economic incentive to mine using the lowest cost energy, which often means clean and renewable energy. But for me, you're talking about timing, discovering all this. I did sort of discover it at one of the worst possible times because it was at the first or second big run up in 2013, and I was surprised to go from like 50 to 250 and then down to, I think it was sub 100 level. And when that happened in like Q1, Q2 of that year, I pretty much wrote it off for like 6 months. I was like, this thing is dead. I just knew that it was, hey, there's something in cyberspace that has absolute scarcity and has to be mined. If that's the case, then everything should continue to collapse against it just because fiat is infinite and they're always printing more money. That was only several years into the big quantitative easing spree that began in 2009 and onward. But then after that, I just kind of became disillusioned and wrote it off completely until I think it was November of that year. All of a sudden, prices skyrocketed. It started to get a little more mainstream coverage. And then in the years to follow, I started kind of learning more about everything and the technical aspect and all that. Eventually decided, okay, just need to have a longer term perspective. And that's why I always encourage people to, if they're going to have any allocation to it whatsoever, always have at least a 4-year time span, ideally 10 years or more even, and don't check the price all the time. Just continue learning about it, dollar cost average if you can, and that's typically the safest way to go about it. And it's not a get rich quick scheme, but it's a savings technology to preserve what you have, and it can increase your net worth over time. And anybody who does that, I believe, will one day, however many years from now, will wake up and have 90+% of their net worth all of a sudden be in Bitcoin, assuming they had a more or less average income over that time. And then it becomes a question of where do you go from there, and which is, I believe, part of the reason, and there's on-chain evidence to support this, for sort of price disappointments this cycle and recent price action, because a lot of wallets that were 2, 5, 10 years old with large balances started moving to exchanges and selling, and that creates downward pressure, obviously. So once that's flushed out and things settle down, who knows? Could be new all-time highs this year. Could be, I'd be willing to bet on a less severe bear market than everyone's expecting. That much I'd feel fairly confident in predicting, but we'll see. All the people calling for new radical all-time highs in the near future, I don't know. I feel like that's a little optimistic, but
I think
let's
it's
move on.
interesting to consider how strong a hands the Bitcoin that is changing hands right now is probably going into, because ultimately sentiment right now is very bad from any sort of anecdotal way I can think of measuring it. And so when I think about the volume of Bitcoin changing hands at these prices, it's actually an incredibly bullish setup, which is that the only folks I know confidently accumulating Bitcoin right now have designs to never ever sell it. So you can almost think about every bit of volume changing hands in the 80,000 range as Bitcoin that is getting destroyed, sent to watch only addresses that will never move. And if that's the case, then it doesn't take a lot of demand movement to really make things run. But yeah, we'll see. I'm irrationally optimistic and bullish and always have been I'll go on record saying quantum doesn't exist and Bitcoin's somewhere between 250 and a million this year. But I've been wrong for half a decade. You can ask my wife about that.
Right. Okay. Yeah, I totally agree overall. And yeah, at the very least, that's got to put a floor under the prices if all that supply is just locked up and not moving. The only question I won't get into too much is that I think something like 75% of all trading is in derivatives now. That's
Mm.
another unique market dynamic that has kind of changed. And so it's hard to say. I don't really know how someone would analyze it particularly, but the genuine price discovery that's been there all these years may be somewhat diluted now. Although in the long run, it's something with absolute scarcity that people can take ownership of. I think the price discovery will eventually win out, but this is going to be a unique year for a lot of reasons. The gold and silver vertical moves are really not a good sign. If you ask me, that typically only happens, financial markets tend to price in the future, as you know, and when there's that kind of flight to safety in this mad speculative rush and things that are typically seen as the opposite of speculative, to me it indicates someone out there must know something and they're expecting a big shock to the system this year, whether that's a war, cyber attack, a pandemic, a sovereign default, financial collapse, or something. I believe the odds of that happening this year are much higher than in recent years. Some sort of black swan like that could easily be on the horizon, and that throws a wrench into any view, any prediction. We don't know what. I guess we never know what's going to happen exactly, but I just wanted to put that out there. And I've been stating this publicly and writing about this and stuff, but I see the odds of a black swan event this year being higher than usual. So we'll see what happens. Let's get back to our main conversation. There's often tension between Bitcoin ideals, real world business needs like payroll, taxes, compliance, and that's even true for individuals. Balancing personal finance and Bitcoin allocation can be tough. So, how do you help founders navigate this difficulty without compromising their values?
Yeah. If you have any sort of ethical framework or faith, you can probably make a strong case that you have a moral obligation to pay as little tax as possible. My primary role is not focused on tax compliance or really payroll, but I think that there's for sure a rub between building a business and going through the administrative bureaucratic hurdles necessary to do that legally, and Bitcoiner ideology, especially in the sort of anarcho-capitalist piece of it. I have found that folks who come to understand Bitcoin sometimes struggle with that if they then go to build a business, because it just like really irks them, or they struggle to cooperate with the system. And there's a lot of cooperating with the system necessary to build a business. Most of my clients usually became business owners first, right? Building a large successful business takes a long time, and Bitcoin's only been around for 17 years, let's say 10 of which it had enough sort of cultural, social zeitgeist for a random business owner to come aware of it anyway. And so most folks that I've worked with so far, at least, they are business owners first, then they became Bitcoiners. So I think that's how they've navigated it. Moving into the future, trying to build like strictly on a Bitcoin standard is a very noble effort. It probably limits the sort of total addressable market of a potential business if you say, oh, well, we won't accept fiat payments, or we aren't going to build in a regulatory compliant way. I have a lot of admiration for those sorts of approaches, but they're probably not going to grow to the scale where they need capital raising and investment banking type advisory work. But I'm rooting for them for sure. And because of the regulated nature of the type of work I do, I've had to certainly build within the bureaucratic regulatory framework. And it irks me as well, but you got to do what you got to do to stay out of prison and make a living.
For sure. Random question. Do you know or have you heard of, say somebody has a small business, be it physical or virtual, and they just have an LLC or an S Corp that does maybe low six figures in revenue. Do they ever add Bitcoin to their balance sheet, or is that a possibility?
I think businesses at that scale are kind of hard to distinguish from the personal balance sheet of the owner. Like in the sense, yes, because if a Bitcoiner is running a business like that, they have Bitcoin. And then in a sense, no, because there's really no distinction between the two. Again, not a tax guy, but I'm not aware of a way to sort of use Bitcoin accumulation as a like expense line item for a business to reduce taxable income, if that's what you're asking. But certainly you can think about interest on Bitcoin backed loans as a business expense, which is a reduction in sort of taxable income. But again, like I think the tax stuff is a world I have a lot of respect for the experts in, because I could never do it. It's constantly changing and it's just demoralizing.
That's interesting. Funny you say that because next week's guest will be a guy who was a successful marketing entrepreneur, sold a company for a very large exit, and then he had some Bitcoin and altcoins and discovered it became a tax nightmare after a big bull market, and so he started a crypto tax advisory firm. And yeah, looking forward to that conversation. I had a good CPA here locally in northern Utah that helped me out a lot, was great for a few years, and then he had to leave because he was signing a non-compete with a family estate. He's managing that exclusively now. So I was kind of out in the cold, and then I just happened to find a guy named Tony on LinkedIn somehow. Just saw a post of his or something, and his headline said something about being a CPA, and then he's also a Bitcoiner. So I reached out to him, and now it looks like that'll be a really great partnership. Yeah, there's all kinds of demand for any sort of service where Bitcoin is involved. It's just so super helpful to have someone who has the same mindset and understands the assets and everything revolving around it, because it just makes things so much simpler and easier. Whereas in the past, I was kind of considering, well, I have my main CPA here. I may need to advise, with an outside CPA who just understands these other things. But of course, when you partner with someone who's already in that world, it just makes things a lot smoother and resolves a lot of issues that could come up. So yeah, it was definitely a good move on your part, in my opinion, starting this business. So for listeners who are entrepreneurs or professionals holding Bitcoin but running fiat businesses, what practical steps can they take to strengthen their financial position?
I think the biggest thing so just like an individual, first things first is spend less than you earn, save the excess in Bitcoin. On a business level, that can mean more than just make more money or buy less stuff. It can also mean manage your cash flow, your cash conversion cycle, right? So are you taking inventory on and are you selling product on 90-day terms? Are you able to pull forward receivables and stretch payables, which turns over your cash faster, which turns you into a Bitcoin accumulation machine faster? There's some tweaking of the knobs there, but the biggest thing is build a resilient position as a profitable business and use the excess to accumulate Bitcoin. That Bitcoin will give you optionality, just like it does in our personal lives. It gives us optionality to have a podcast or to start a business. It gives businesses optionality to, man, this competitor is kicking our butts. Well, we've got this giant pile of Bitcoin. Let's buy them. These solutions appear to folks who save in hard money over the long term because that money grows in value. So the today solution for that is evaluate the financial strength of your business and make sure that all of the operating pieces of it are in place. And then you can start to kind of get cute with the cash conversion cycle and then just accumulate Bitcoin for the long term. I mean, I tell individuals, same as I tell businesses, if you buy Bitcoin every day for 10 years, it doesn't actually matter how much you buy. You will end that period with a new level of financial independence that you never would have had before. And it's not because $1 a day over 10 years is under $4,000. Like that shouldn't really be enough, depending on what Bitcoin's price performance does. It's because that will require that will grow. And while you watch it grow, it will pique your interest. And I'd be pretty surprised if anybody was at $1 a day DCA for all 10 years and never thought, I should start getting this. I should start accumulating this at a higher pace. You'll start to study Bitcoin. You'll come to understand it. And then the feverish scramble to accumulate it as fast as you can begins. And then financial independence arrives. And then you can start to do what you were meant to do, which is build beautiful things in the world.
Well said. Yeah. People come for a number, go up. they stay for freedom go up. And that's typically how it works, is you just become interested in this thing that can preserve and grow your capital. And then over time, you start to wonder, well, why is it so efficient at this? And what is the big deal? And how does it work? And then you start to understand it in the context of the broader monetary system as a whole. And it just totally changes your entire worldview. And that's part of what I'm trying to do with my podcast, newsletter, and YouTube, is just sort of explain all this stuff as efficiently and clearly as possible, because it's elegantly simple and yet kind of technically complex at the same time. And I've learned a lot over the last 12 years or so, and just trying to bring that perspective to the masses, to the world, in a way that I hope can be helpful and maybe shorten the length of some other people's journey. And along the way, I get to learn about these interesting aspects that I didn't even know about, like the things that you're doing. So, Scott, how can people find you online and your business?
For sure. capitalbadvisory.com is the website. Scott at capitalbadvisory.com. You can reach me. I'm on Noster at primal.net/suitcoiner. I'm on LinkedIn, just Scott Marmoll. And if you want to chat about your business or think about ways to navigate the capital markets, now or in the future, please feel free to reach out. I mean, at the end of the day, my goal is to talk to Bitcoiners about Bitcoin and help them with their business problems. And it's a lot of fun. So happy to do it with anybody that considers themselves a Bitcoiner as well. I would just say thank you very much for the time. I think what you're doing is great, and your contributions to the Bitcoin space. I think all of us sort of feel a debt to Bitcoin in some ways or other, and I think what you're doing, hopefully for you, feels like a contribution back to this network. And so, appreciate what you're building, and thanks for having me on.
Yeah, definitely. Thank you. All right. Thanks, everyone, for listening. If you found value here, please leave a 5-star review on Apple Podcasts or Spotify. I'll leave a link in the description to the Hard Money Dispatch newsletter. If you're more of a reader, go ahead and check that out. And follow me on YouTube at Brian Nibley, Twitter at BDN Content, and I'll leave links for all this in the description. And thanks for listening. We'll see you next time.